Big headline from the pharma space. Commerce Ministry has released a detailed strategy to increase the presence of Indian pharma companies in the Chinese market. It has recommended 17 options to gain market share. These include exploring the option of a joint venture with Chinese companies. This development comes at a time when India is dependent on China for 90% of its API requirement. Rituparna Bhuyan joins us now with the details. Ritu, so 17-point strategy has been put together by the Commerce Ministry to try and get India to increase its presence in the pharmaceutical market in China. Take us through the details.
One area through which India wants to reduce its trade deficit with China is the pharma sector. But there are a lot of non-tariff barriers present in the pharma space as far as China is concerned. And hence the 17 strategies which this Commerce Ministry sponsored study has listed out, seeks to basically ensure that Indian pharma companies gain market share. For example, it talks about having joint venture with Chinese companies. But at the same time, it also warns such companies wanting to have joint venture with Chinese companies to ensure that their core IPR is protected. If at all they have to share IPR with such Chinese company or joint venture partners, there has to be an upfront payment. In addition to that, this study also suggests that Indian companies having joint venture with Chinese pharma companies should ensure that they have enough control in the board as well. In addition to that, this report also talks about how we are dependent heavily on China as far as API is concerned. Up to 90% of our API requirement comes from China, and hence they have this report advises that India should increase its capacity as far as API is concerned. Last but not the least, this report also talks about having stricter regulations for registration of Chinese drugs in India, because Indian companies take about 5 to 7 years to register their products in the Chinese market. With that, it's back to you.